Welcome back, everybody. It's Bjorn, your trusted guide to real estate, Minnesota. If you know me, you know that I enjoy baking. So today, let's cook up something a little different. We're going to break down the recipe for your mortgage payment. See what I did there? Just like baking a cake, there are several key ingredients that come together to make the final product. Ready to see what goes into this financial dish? Well, let's get started right after this. Let's start with the principal, and I'm not talking about the one that you got in trouble with in high school. I'm talking about the amount of money that you borrowed to purchase your home. Each month, a portion of your mortgage payment goes towards reducing this loan balance. In the early years of your mortgage, most of your payment goes towards interest. But as time goes on, more of it will chip away at the principal. This gradual reduction is a key to building your equity in your home. Next up, let's talk about interest. This is the cost of borrowing the money from your lender. Your interest rate is either fixed or adjustable, and that determines how much interest you're going to pay over the life of your loan. Most people are probably going to have a fixed rate interest loan, just an FYI. But your interest rate and how it affects your payment can be a big factor in your overall mortgage cost. Now, let's talk about the only second thing that's assured in this life. I don't want to talk about the first one, but that's taxes. Property taxes specifically. These are local taxes assessed on your home and are typically collected by your lender and held in an escrow account. Each month, a portion of your mortgage payment is put into this escrow account to cover your property taxes when they're due. This amount varies based on your home's assessed value and the local tax rate. Keeping up with these taxes is crucial because unpaid taxes can lead to penalties and a lot worse. Then we have insurance, which is yet again another critical part of your payment. This includes, in some cases, a couple different types of insurance. Homeowners insurance, which protects your home from risks like fire, theft, and certain natural disasters. Your lender is probably going to require you to have this to protect their investment. The cost is collected with your mortgage payment and held in an escrow account until it's due. Then we have another type of insurance, and that's the PMI, or private mortgage insurance. And different types of loans will have different variations of this. But if your down payment was less than 20%, you'll likely have to pay PMI. This insurance protects the lender if you default on the loan. PMI is an additional cost on top of your standard mortgage payment, but will be removed once you've built up enough equity in the home. But again, it is a portion of that mortgage payment. In some cases, you might be living in a community that has a homeowners association and you have some HOA fees. These fees, which I've done other videos on, are used to maintain common areas and amenities like landscaping or community pools or roads. While HOA fees are usually paid separately from your mortgage payment, they can sometimes be included in your overall housing budget. So it's good to keep that in mind when you're calculating your expenses so it doesn't sneak up on you. Now let's talk about how all these payments are managed. Many of these components, the property tax, the homeowner's insurance, and PMI, are handled through an escrow account. Here's how it works. Each month, your lender collects a portion of these costs along with your mortgage payment and deposits it into an escrow account. When property taxes or insurance premiums are due, your lender uses the funds from that escrow account to pay those bills on your behalf. This system helps ensure that you don't miss any payments and keeps your home and finances in good standing. So let's bring this home. To sum it up, your monthly mortgage payment typically includes principal, which reduces your loan balance, interest, the cost of borrowing the money, property taxes, which are paid through an escrow account, insurance, including that homeowner's insurance, and possibly PMI. And in some cases, HOA fees might be applicable. Having a good understanding of all of these aspects of a mortgage payment is crucial. I'm sure many of you have gone online and used a quick mortgage calculator to see what a monthly payment would look like. Oftentimes, those calculators don't include the taxes, the homeowner's insurance, the PMI. They just give you the number of what it would look like if you got a loan for this amount, what your principal and interest would look like, and that monthly payment. So you want to have a clear understanding that all these components go in, so there's no surprises. If you need any more information on this whole process or any one specific thing, I can help you out, but I also have some great resources that I can pass on to you to help clear things up. I hope that this video was helpful. I hope that maybe you even found it entertaining. If you did, don't forget to subscribe and hit that like button, and maybe share it with somebody who is looking to get into the home buying game themselves. Thank you so much. I'll be back before you know it with another great video. So until then, be kind to one another.